Hello, and welcome to another update video about Doge. Yeah, the Doge chart is still moving in this sideways range, but we want to go into the weeds today and take a look at the microstructure there. Bigger picture, completely unchanged. What we're dealing with here is potentially a substantial low that formed in April, and that might have been a low in wave 4. We could now be in a larger degree wave 5, which you can actually see on our larger time frame charts. So, you know, if the fourth wave bottomed in April, then we should now be in a fifth wave, which could unfold as an ABC structure, for example, ABC. Really, there should be another layer of waves in between. I haven't labeled them because it's not important in the short term. But the idea is that the A wave could be either a 3-wave move, or if we get another high, it's a 5-wave move. That would actually be more bullish. But very often these A waves are simply just 3-wave patterns. So I have to go with what is probable. And therefore I'm watching for this as a 3-wave move up. Yeah? And also this aligns very well with what I see on several other what I see on several other altcoin charts actually, and the Bitcoin chart. So yeah, I just want to point out, you know, obviously it could grind higher from here, yeah. Just to show you how the additional layer of waves would look like, actually. And I still like this chart for some kind, you know, for some sort of upside continuation. Whether it's really going to form all these waves and get to all-time highs, I mean, I'm skeptical. But if the pullback is corrective, we should see at least one more rally here higher, yeah. In what would be the C wave. So again, like many other altcoin charts, not really a high quality chart, right? The quality of altcoin charts is really limited in this cycle. So let's take a look at the Doge short-term chart then. Here on the shorter time frame chart, you can see that the A wave might have topped actually on the 11th of May. It could indeed be in this B wave pullback now, which could be an A wave, a B wave, and then a follow through to the downside would be classed as a C wave, which could reach the area around 18.3 cents, maybe even a little lower, but that would be the first one to watch. I communicated, I think, yesterday only, this resistance area, which is currently still being respected, actually. So resistance is between 22.8 cents and 24.5 cents. This is standard resistance, yeah? And it's currently being respected. So as long as we stay below micro resistance, there's really no clear signal that we get another upside extension. Rather, we've seen something that looks like a 5-wave decline from the Friday high and a corrective rally so far into resistance. So any break below the last lows could really open the door to that 3rd wave decline, which might then take the price to, yeah, round about 18.3 cents or so. Yeah, so wave 1, wave 2, 3, 4, 5. This is basically how it could unfold directly to the downside. What is possible at this point that would not change the structure at all is a wider wave 2, because the wave 2 only reached the 38.2 retracement. As always, you know, when a wave 2 is so weak, so shallow, then probabilities are actually fairly elevated that we might see a wider wave 2. And again, the next levels are 22.8 cents, 23.3 cents, 23.8 cents, and even 24.5 cents as next resistances. So, but as you can see here, we're just ranging for now. Market has really just been in a sideways consolidation phase for the last 3 weeks or so. And yeah, it takes a break below some of these previous swing lows to suggest we're really heading down lower more directly, yeah. Overall, not much going on at the moment. Most of these charts are currently in consolidation mode. I keep you updated. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.